The Financial Times Stock Exchange 100, or FTSE 100 index of stocks, began with a base level of 1,000 back in 1984, and is a list of the 100 most valuable companies in the UK. Within 5 months of its beginnings, it was trading almost 8 points lower, but then soon moved higher as the index was adopted as a benchmark of British stocks. The first big test was the so-called Big Bang in October 1987. A reference to the deregulation of the financial markets. The index fell just over a third during the month, bottoming out at 1515. The index didn't recover until March 1991, as the UK emerged from a recession and consumers began to see some relief from base lending rates at 13%. Black Monday in September 92, when the then Conservative government was forced to withdraw the pound from the European exchange rate mechanism, saw the FTSE gain 15% between the 16th and 25th of the month, exporters benefiting from an unprecedented drop in the value of sterling. Apart from a 19% correction during 94, when Alan Greenspan raised US rates at an unprecedented pace, and a 25% correction in the summer of 1998 in the wake of the financial crisis in Asia, it was then to make a series of record highs through until the dot-com crash, where more than half the value of the FTSE 100 was wiped out between January 2000 and March 2003. Despite a recovery up to the financial crash in October 2007, where the FTSE 100 lost 48% over a 17-month period, the index was not able to achieve a new record high until March 2015. That new high had been over 15 years in coming. Another period of volatility on concerns about failing growth in China between April 2015 and February 2016 then gave way to more record highs, as central bank easing meant that stocks offered the best returns over most other asset classes. Finally, and most recently, was the Brexit shock. This saw a sharp fall by an 11.25% margin, and then an 18% rise all the way to 16,600 just in a few days. But where now? Well, that may depend on when and how fast central banks start to withdraw liquidity from the markets. However, some fundamental analysts will say there are potentially far more serious events on the horizon for the equity markets.